What up traders, welcome back to my channel, and today I am going to talk about the best entry that I have used for the past year now, 2 years now, and basically looked at certain strategies before and how I've adapted them and basically took them disadvantages and tried to reduce them. So I've done a full video on it, and I hope you enjoy, and this is going to be the first for lots of videos coming up because I've got the PC for it now, and I hope you enjoy it. So guys, if you haven't followed yet, make sure you do and give it a like and a subscribe, all that good stuff. But yeah, onto the video. So guys, welcome to my breakdown of my entries that I basically do consistently every single day. I'm first of all going to go through the types of trade entries that most people do, and what I found was quite bad about them, just their disadvantages, that using a different method which is called the secret sauce kind of got rid of those disadvantages, because they're still quite good. So the first one, let's just start off with this. So trading entries, we've got closures. Okay, so closures means specifically for candles where they're closing either above or below range. The first thing, obviously, this is going to be a video plainly on entries, nothing about support and resistance, but just to give you a little kind of education on that. Support and resistance is where basically price can hold a certain level as support, and the resistance is where price can't close above and it makes some resistance at some kind of price. So for example, you can see there's quite a lot here. So if you do this, let's just have a look at some. So you can see here there's resistance right here, there was support right here. Therefore, this is the little range, and this is the support. This is resistance. When this support is broken, that is changing of the zones, and we're coming to this zone, etc., etc. And then now we've made support on here, and then we've made resistance on here. So this is where all those things come in handy, and yeah, all that kind of stuff. So let's just go into this. So candle closures, and what are the advantages of this? Well, the good thing about candle closures and entering on the candle closures, let's just talk about the actual candle closures in general. So let's just get an example here. So firstly, waiting for candles to close, this is going to be a different topic, but first of all, the kind of main thing is waiting for candles to close means that you don't get stuck in this. So for example, if people were looking at this as support, it's held support, it's held support, held support, and then you can see this wick here. Can you guys see this? 1 second, I will zoom out, I think. Let's do this. You can see this wick here. There we go. This big wick here. Okay. Now the issue with this wick is, people could get into entries, go, oh, we're breaking support here, we're going well, but there was no closure. Therefore, there's no signs of confirmation that we are going to head down. It can dip into this area with the wicks, the lower wicks, but if there's no closure, there is not confirmation. So waiting for closures is obviously a very, very good tool. So you can see here, further along, let's just clear this. You can see that this candle right here closed below, and then price started to fall down. It's quite choppy, but there's an example. So price to close means that I expect people to use closures doing this. So you get a close below resistance, you do a stop loss on the closure. So as in when this next candle here opens, you're basically entering straight away. Now the one disadvantage, well, there's quite a lot of disadvantages, but the one disadvantage that I didn't really like was that yes, we've closed below, okay, which is very, very good. We've closed below. A good example actually is further down here. So I'm going to do this one. Now just think of the disadvantage here. So you can see that if some people will be in some shorts here, and they'll be having a short right here, we close below, great stuff. They'll have the stop loss above the previous, which is just closed right there, which is great. And obviously, if you actually look, this would actually be a great trade, and you'd actually be making some money. But there is one bad thing about this, okay, and you can see it very clearly in this one. Most candles, so on any time frame really, so if you look at 30-minute, if you look at an hourly, all these kind of time frames, basically if you back test, 85% of candles have a bottom wick and a top wick, okay? So that means, out of 100 candles, 85 of them have a top wick and a bottom wick. And if people don't know what they are, this is what they are. So can you see, let's just do an example. So you can see here, this candle has a top wick and also has a bottom wick. You can see this one next to it also has a top wick. It also has a bottom wick. You can see this one here has a bottom wick, top wick, and also has a bottom wick. This one here has a bottom top wick, and this one here has a bottom wick. Okay, this one has a little nipple, but etc. etc. You get the point. So, knowing this fact, entering on closures of candles, you basically are saying to yourself, you know, I want to get into this sell here, but I'm expecting price to drive down. But you know for a fact that 85% of candles make a top wick. So if you enter on the closure, you basically know you're going to take at least some drawdown. Okay. Some drawdown, and these can be quite aggressive. In this example here, you can see how far did this pull up. Let's get our measuring tool out. It pulled up, you know, 9.1 pips. Some people actually wouldn't get stopped with their not slippage, with their commissions and stuff. So are you happy to hold that much drawdown? Some people are and some people aren't, but I didn't really like it. You know, entering on candles, like, why am I getting in so early in this candle? Basically what you're doing is you're expecting price to basically push bearish, you know, push these massive sells for the full 15 minutes, basically, like this candle here, which can happen sometimes, which I'll get onto in a sec. But you know, most of the times, as we've seen probability-wise, 85%, it's going to make a top wick, and this top wick can be very, very crucial. And what I realized was, you know, this kind of word, the fake out. So fake outs happen where basically price closes below support or above resistance, but then closes back in the range, which is a fake out. So you get faked out. A lot of people don't like this. I hated getting faked out. It really annoyed me. And I was like, what could I actually do to make this, you know, not be an issue for me? But anyway, I'll go in that in a second when we talk about the secret sauce, okay? But this one, you can see, you know, price comes up, you're in some drawdown, and then price starts to come back, flip, and then starts to fall, which is great. So obviously the closure there works, but you do take a lot of drawdown. So that is a disadvantage. So the disadvantage I'm going to put here, I'm going to write some text here, guys. So for closures, the disadvantage, so here, equals lots of drawdown. So I'm just gonna do this. Lots of drawdown, okay, which is true. You get a lot of drawdown with it, and you know, one of my great mentors that I've been learning from forever is Ted, and Ted's quote, which he said numerous years ago, and he keeps on saying it, is the best trade is a trade that has no drawdown, zero drawdown, okay? Not 100 pips, not 200 pips, zero drawdown. If you can enter a trade at the perfect time, where you're in profits the whole time, that is the best trade to be in. So that's what I want to try and maximize in my trading strategy. So just keep that in mind. Now, the next kind of trade, which is also better and can kind of actually help with this, is crossing the bottom wicks or the top wicks of candles. So exceeding the lows or exceeding the highs, I normally call it. We'll use this example again. So this is the support line. You can see we close below. Great. Now, okie dokie. So what I mean is getting into a sell position when the low of the previous right here is exceeded. Okay. So exceeded means this candle pushes below it. Okay. And this can be a very, very good strategy. This kind of helps a bit more because it gives more time to make the top wick here, or top wick, and then to drive down. But basically, you're hoping that the low is not broken instantly, because if it's broken instantly and then wicks back up, you can even have a worse entry than someone who just entered on the candle. Okay, and these wicks, these bottom wicks, can be quite aggressive. Oh shit! 1 second, redo. Can I redo? No. They can be quite aggressive. Oh shit, I can do that. Nice. Undo. Lovely. And these can be quite aggressive. So for example, if you went to get in this trade here, just a bit lower down, you would have had to get in at this point. This is 6 pips from the entry. So someone entering on the candle just at the top there is a lot worse than someone entering on the low, you know, means for profit and stuff like that. It can be quite risky. But also on the advantage, you expect price to wick up, make its top wick, and then go down. But the disadvantage of making the lower wicks is that price can easily, and this happens quite a lot. I'm not gonna lie, this happens quite a lot. If price is forming bearish movements and you try and get into a sell straight away, and this low is created straight away, as I said before, you're expecting price to push down for the full 15 minutes, because I'm on the 15-minute time frame here, but this is exactly the same as 30-minute, etc. So if it breaks the low instantly, you can have a worse kind of entry. If it does start to make its upper wick, it's going to be even more. Like, for example, if you got in here and price, did exceed the low, but then starts running back up, you're going to be an 11, 12 pips drawdown, which is going to be rough, okay? And what I thought was, these candles, what is this candle actually saying? So this, like, for example, this red candle here, or this red candle here, it's basically saying that through the first maybe half of the candle, or 20% or 30% or 40% of the candle, it was actually making its top wick, okay? So the first 20, 30, 40, even 50% of the candle, so 7 minutes into the candle, it was making its top wick. And then you can see as candles started to close, we were making the flip, and then we were starting to exceed down. So just think about that in the 50-minute candle. So at the top it was making this and this and this. Okay, great stuff. Now knowing all of these ideas, so let's write down the disadvantage of the making the lower wicks. Okay, so very, very simple. This is just looking at the market and what it's doing, and how basically to get rid of these disadvantages. So we do breaking low / high, okay, of the previous. And the disadvantage of it is if broken early on in candle, even more drawdown. So a lot of people, actually, I see, even worse, and this is probably the worst thing you could possibly do. I'll try to find an example where it would work. Maybe here, but very, very, very rarely. Basically, when price closes and exceeds the lower wick without making its top wick, and you can see right here that has happened. Okay, now this is not a very high probability. But sometimes in my live stream, because I do a London live stream, this will happen. And people are like, Max, why didn't you get in? Why didn't you get in? I'm like, because I know this happens maybe twice out of 100 times or 50 times. That's not a good probability. So I'm happy to leave these trades because, as I've said before, most candles have a top wick here, which this doesn't have, but you can see the rest do. Top wick. So when price is pushing down, exceeding the lows here, yes, this trade would have worked, but for most times, I'm telling you, you need to look back, do your research. It wouldn't have worked because breaking the lows and no top wick is a bad decision to get in, I'm telling you. And that's just by looking at candles. I mean, if it broke the low here, you'd have been screwed. If it broke the low here, you'd have been screwed and then made its top wick. So top wicks are very, very important, okay? And that comes on to my last point. So top wicks and bottom wicks are very, very important to get a sustainable trade. Just for the fact that I know, 85% of the time, it makes a top wick or a bottom wick. So I want that probability to be on my side rather against me. Because if I do a losing trade, which is what happened when I was younger, I'd be like, why did I lose that? I'm like, because it didn't make its top wick. And yeah, 15% of the time it's gonna work, but 85% it's not gonna work. So guys, let's go on to the secret sauce. The first thing that I also wanted to talk about here was also this lot of drawdown. We also talk about fake outs. I touched on a bit before, but I want to do a bit more about it. So let's actually have a look at a fake out. Let's see if we can find one somewhere. A fake out. Hey, ooh, this is like an alright one. Yeah, this is a good one. Okay, so here's a little fake out here. 1 second. So this was resistance. Okay, this is just how I do my zones. Pretty self-explanatory. You can see the support here, and you can see the resistance here. And this little zone right here. And look at this, we've got a candle closure above. Now at this point, people who work on candle closure would be entering here. Stop loss would be below the previous right here. And TP should probably be at next zone, which is here. Which sounds fine. That's all good. It's all good. And you know, sometimes this will work. But I've realized that sometimes it doesn't work, and I want to make my profitability as high as possible. So we've got the closure, okay? Now, one way I wanted to try and do this was, obviously you could do the breaking of the highs. So here you could do the breaking of the highs, and this will be, you know, I think breaking of the highs and breaking of the lows is better than just closures in certain circumstances, because you get a confirmation that we're exceeding the high. And you know, when we're in a bullish momentum, all we have is higher highs and higher lows, okay? Which is fine. So here, luckily for the breaking the highs and the lows, you wouldn't have entered because you would have been waiting for here. But if this did happen, you would have had a big ass stop. Holy crap, a fucking 30 pip stop, okay? But anyway, it didn't, and you can see here, price made its low. Can you see here, which is what we said, you know, we always want price to make its low, and it never came up, did it? It never came up. It closed back down, obviously it closed above support, but still it closed back as bearish, and then we got to close bullish here, and then we actually got to close bearish. So this is a fake out kind of area here, okay? And you know, people who are entering this candle here would have lost this trade for sure, because price, you know, was actually, you know, wasn't exceeding the highs of the previouses here, and came back here. So you would have hit full stop loss here, which would have been very, very damaging. So what I thought was, you know, how am I going to get into this trade? I don't want to be too high in. I don't want to be getting in, you know, on these highs, because it's too, you know, that's huge compared to entering here. But I don't want to be also stopped out with the lower wick being formed. So what I came up to the conclusion was, I want to be waiting for flips of candles. Okay. Now what a flip of a candle does is it lets me the candles make a lower wick, which is what I want. And then when price starts to exceed and starts to flip, which means if for example this candle here does something like this. Let me just get my tool out so I can show you guys. This candle made its lower wick like it did here, and then when it starts to come up, it starts exceeding and flipping and doing this. Okay. Now, in my trading strategy, which is what I want to show you, the secret sauce is I enter on the flips of candles when the lower wick or the top wick has been made. So here, if this candle did exactly what we did here, so made its lower wick, which, you know, price did at this point at one time, and then started coming up towards the you know, towards maybe if this candle had 15 minutes left or 10 minutes left, and then started flipping, turning this basically blue or white, whatever you call it. I'm colorblind as hell, so it looks pretty white to me, but I think it's blue. Then I would enter, and you go, where would your stop loss be? Well, with the secret sauce method, which is what I'm going to call it, I quite like the secret sauce method, is the stop loss is going to be below the current low which just been made, which is right here. So to put this into context here, I'm going to be doing a buy. If this happened, obviously it didn't happen because we made the lower wick and never flipped it back. But if we made the lower wick here, this would be my stop loss, and this would be my take profit. Obviously, I'd take profits of 10 pips, we all know that. But if this lower wick was made and then we start exceeding, look what I've done. So first of all, I have taken out the factor of being faked out, because if price makes its low here and starts wicking up and starts exceeding, we're not having a fake out here. We're going to be pushing out of that zone and coming to our next zone, which is up here. Secondly, what else have I done? My stop loss is so much tighter, okay? So from people who have got in on the closures right here would either probably have a 22, 23 pip. This is on the 30-minute. There's maybe a 15-minute here, which is about 15 pips. Now, my stop loss in this case would be 7 pips, okay? But it's the same process, okay? It's the same process, but the thing is, I'm waiting for the candle to flip to make its lower wick. Tick. The second thing is we're leaving the zone now, and we're starting to push off, and we're flipping the candle. Tick. And the second thing is the stop loss is so much tighter, because we shouldn't come back down to this low which has just been formed. Now I'm going to do a couple more examples here, but you get the gist of what I'm talking about. It's basically minimizing my stop loss, so I get a lot smaller, tighter stop loss. I get less drawdown because I am trying to enter on when the push is coming. And I'll show you some more examples here, some really, really good examples. This one here is quite an interesting one at half two. This made not much of a top wick. So personally for me, I probably wouldn't get in here. Obviously it did make its top wick, but preferably for me, I want, a top wick which is quite, significant, maybe like that. Normally about 5 or 4 pips. And then we come down, and then if this move here happened, I would have been in this trade nicely. Okay? Which is what I'll come on to in a sec, the one disadvantage of my move. But I'll see you why this is better than the other disadvantages for others. Right here. Here is a great example. Okay? And there's actually one here as well. But I'll do this one. Price has got a very, very bearish candle here. Okay? This is one that we talked about before. So someone would have entered here. They've had a big stop loss. So if you entered on this candle right here, on the closure, you'd have had a 17 pips stop loss for a... Actually, let's go to the 50 minute time frame. I think we can get a better judgment of it here. No, it's still better. I'll do it on the 30. Where is it? I know you're on my mind. Yeah, 30 looks nicer. Okay. So you can see we made bearish structure here, closed below, and now it's making this top wick. Now, obviously for me, what I've just told you about and this move I'm literally looking for, I'll be ready to enter here. When this candle closes, I'm like, right, okay, now I need to wait for this top wick to form. And then when we start flipping down, I'm going to enter. I could either enter on the exceeding the lows, but I normally like entering on the flips. Just gives me more of a better entry. So, in this kind of situation here, this candle pushed all the way up. Now, luckily for people who had closures, we did start falling. But if this candle closed back in this range here, that'll be a fake out and you'll be goosed. It'll fill up that range again. So, for me, personally, I waited for the flip. I actually did enter this trade as well. My stop loss, where's my stop loss going to be? Obviously what I've said before, this is what it'd be like before, but for me, I do it on the high of what it's just created. Now you can see now, what have I done? From a 18 pip stop loss to a 8 pip stop loss, 9 pip stop loss. I've halved my stop loss for the same thing, and I've also made the probability of the trade happening so much greater, because we're waiting for the wick up, and when we start exceeding the lows and flipping the candle, we have a large probability, and we're going to be in instant profits here. It's going to be pushing down nicely, and that is the perfect trade, the perfect trade entry, which a lot of people use. It's the place to be. The secret sauce, which is what I'm going to call it, is the place to be. Same thing for this up here. I mean, there's so many examples here. This candle closed very, very bearish again. Nice. Obviously didn't make a top wick, but also bearish candles. This has made a little support here, and now we're starting to drop. Great. This has made a top wick here. Let's measure how big this top wick is. 4 pips Jordan, 4 pip wick up. That's completely fine with me. I'd take that. But obviously, people who are on the closures would have to take that 4 pip drawdown. And if it comes up even higher, you've just lost a trade and it's a fake out. Okay. So you wait for this top wick to be made. When we start exceeding, we could have a stop loss here. This stop loss is 4 pips. So what I want to do also, and you could be fluid about this. It just depends on the outcome. As I said before, my stop loss is normally above the previous. The current candle that we've just made. The current candle high in this case, but obviously if we're bullish, the current candle low. Obviously this is only 4 pips, which is fair enough. You could have your stop loss above there when we start flipping like this. So we enter on the flip, stop loss below, which is fine. I'll probably do that because I'm expecting price to push, especially when we come to these levels and these levels here. My stop loss will be break even. But some people, if they're a bit more whisk of, if they want to make, give it more room, which is completely fine. Some people can also do this, and this is, dynamic risk. So they could have their stop loss above the previous 30-minute candle, which is here. Let's have a look here. 7 pips. That's completely fine as well. But for dynamic risk, you don't want this candle. If we start to push here, you don't want this candle exceeding the high of the previous. And this is where I'd probably be out or take off quite a lot. So with dynamic risk here, you could take off 50% of your risk. Let's just make this a bit clearer here. Yeah. So you could take off 50% of your risk if the high is exceeded, and then when it comes here, you've just saved more money than you wanted to save if you took the loss. And that's dynamic risk, and that can really help. So for example, this is what I mean. So if this price pushed below here and then wicked all the way back up and exceeded the high here, you could maybe take off 50 or 75% of the trade, and that's how you manage risk here. So it's really, really good for stuff like that. Numerous times I've used it and I've closed half if you start exceeding the highs again. And most of my stop losses now are averaging about 67 pips, and my gains are about 15, 10. So really, really good risk to reward for this strategy. And it means you don't get any fake outs. You don't have huge drawdowns because you're moving with volume, and when we're pushing, have made a top wick or bottom wick, and that's what we want to be in. These are the perfect trades you want to be in. And it's perfect scenario. I'll try and have a look at some bullish ones if you can find some. But GJ has been very, very bearish at the moment. Let's just try and do some here. I can't find any. Let's have a look. Can't find any nice ones I can go through here. But I can do a drawdown. Okay. So let's have a look here. Let's have a look at the drawdown. That actually has a little top wick. That's fair enough. But so the drawdown of this method is that sometimes, maybe once a week, once every 2 weeks, I'll miss a trade because of the top wick. Okay. Now there's a clear example here, basically, even though it does have a little nipple, but still, I like having a bit of a bigger top wick. Okay. Now you can see that this candle right here. So we had support right down here, or you could have it here, but basically, I would do it here actually. We had a candle close right here. Let's just zoom into this. So forget about the stuff on the left. We have a candle closure right here, which is great. So people entering on closures here will be great. They'll be grand. They'll be in. I would not probably get into this trade plainly for the fact that the top wick is not big enough for me. I prefer a top wick to look like this, and this is completely fine. This is just your strategy, but for me, I'd want the top wick maybe a bit like this. Okay. And then we start exceeding, and then we're good, and therefore my stop loss can be here. And the reason why I wouldn't get in there, obviously I said there's the top wick, but also let's have a look at the stop loss here. So if I got in at the close, or just like when we start exceeding here, my stop loss is 10 pips, not too bad, but preferably normally most of the times here, the stop loss is quite big. Obviously here is actually a really good example, and I might have entered because of the fact that the stop loss is so tight, so 10 pips is fine for me. If normally it's about 13, 14 on just the closures, and that's not good enough for me. It's too high. But for here, I probably would have entered now. But still, my perfect entry, which is what the source is basically all about, is waiting for these top wicks. Okay, nice top wicks, and then we get the confirmation when we start exceeding and flipping. Amazing stuff. So yeah, sometimes we miss them, but I'm happy to do that because, as I said before, going back to the first point, linking it all together, 85% we make top wicks and bottom wicks. Okay, and I'm happy to miss the trades that don't have a bottom wick or a good enough top wick or bottom wick, and because I know most of the time, 85% of the time, it's not going to work, or we're either going to get some drawdown then start pushing down, or we're going to wick up and then start driving down. So 85% of the time it works, but yeah, there's this 50% of the time that we do just run down straight away, and it doesn't make a top wick. That's completely fine with me, and that's the thing. It's all about what's it called? The percentage, the probability of winning a trade, okay, and the probability of it working out, etc. And if it's less than 50 if it's working out, then don't take it. And this is 15% chance. And some people on stream are like, oh, it's going. I'm like, yeah, that's great, but it's not in my plan. I know if I repeated this 100 times, I'd only win 15 of them, and that's not a risk I want to take. So to end off this video, I'll try and move it here a bit higher. Hey, hello squad, hello. We talked about the source, the secret source, I'm going to call it. Waiting for the top wick, waiting for the bottom wick. What it does is it reduces your stop loss. It gets you into clear profit straight away instead of a lot of drawdown. And if the candles are broken too early and you get wicked out and you get faked out, it reduces that. We don't get fake outs very rarely. So I hope you enjoyed this video, and if you guys really enjoyed it, give me a like, subscribe. It really helps the channel, and I'll be bringing more of these videos every single week because I've got the PC for it now. I can do it. So if you guys enjoyed the video, please give it a like, a follow, and give you comments of if it helped, or any kind of adjustments that you guys have made on it. And yeah, I hope to see you soon, guys. So peace. What up, traders? Welcome back to my channel, and today I'll be I can't pay attention.